Mr. K.K. Misri, Vice Chairman and Chief Executive Officer of HDFC, joins us now. K.K., good morning. Thank you for joining us. It's a special week for us. I'm so glad you could join us on our anniversary week.
Well, I'd like to congratulate ET now. It's been 4 very commendable years. What is most commendable is the fact that in a matter of 4 years, ET has made such a large impression in the minds of people and is today one of the 2 most watched business channels in India.
Thank you, Mr. Misri. Your support and your wishes, they mean a lot to us. Mr. Misri, what is your reaction to yesterday's policy announcement? Reserve Bank of India, I guess they've decided to play it safe. They've maintained status quo.
I think pretty much in line with what was expected. I don't think we would have expected any rate cut or any action on the part of RBI. A small chance that a CRR cut could have happened, but even given the current account deficit, given what we are seeing on the currency, even that likelihood was very, very dim. And therefore, we believe that RBI has done what they had to do, which is done nothing.
KK, hi. So how will HDFC respond to the cut/lack of rate cut in the policy statement? And how has the cost of funds for the year panned out for you guys so far?
See, cost of funds is a dynamic number, so it keeps changing all the time. For bond rates have come down a little bit, deposit rates have not changed. So this is a number which keeps evolving over time. And very honestly, we do not get directly impacted by any rate cut or for that matter rate increase by RBI unless and until that ultimately gets transmitted into the system. Because our funding comes to bonds, our funding comes to bank loans and our funding comes to deposits. So till we lower deposit rates, the deposit cost does not come down. Yes, bond rates have come down and term loans too in recent times we've not been borrowing.
KK, FY14 saw most lenders suffer as far as their credit growth is concerned, though HDFC maintained constant growth. What is the outlook for year ahead, and do you see demand shaping up, and from which segments are you likely to get some growth?
See, we have always said over the years that we have targeted a growth of 18 to 20% a year in terms of our business. And again, if you go back to the last 5 or 6 years and you add the loans we sold in the last 12 months, you will so see that in every one of those several years, the actual growth number has been higher than 20%. So we are fairly confident that the growth rate of 18-20%, which is what we've guided the market for a number of years, is something that will sustain for a period of time. We are talking of the next several years. And that comes from the fact that we have a young population in India. We all know that 60% of the Indian population is below 30 years of age, and the average age of a customer when he takes a loan from HDFC is only 35. So it's not people in the 20s who are buying houses, it's people in the mid-30s who are buying houses. And with 60% of the population being below 30 years of age, all these people will over a period of time need housing and therefore housing loans. So at that stage, it's a necessity, it's a requirement. It's not an investment, it's not a luxury, it's something you need to do. And therefore, we are fairly confident that the growth will sustain for a period of time. And that is further facilitated by the fact that we have very low penetration levels in India with a 8% mortgage to GDP ratio, number one. Number two, urbanization is happening in India in a very rapid manner. So the expectation is that over the next 10 years, the number of people living in urban areas will increase, and all these people therefore will need housing and therefore housing loans.
KK, we've seen significant contribution from your subsidiaries to your profits as well, rising quite steadily from 20% in FY11 to 27% in FY13. What's the outlook for the contribution from your subsidiaries going forward?
See, we have also said, and this is no departure from what we said over the years, that the share of profits of the subsidiaries as a percentage of the consolidated profits of HDFC will keep rising over time. So it used to be, as you said a few years ago, 20%. For March 13 was 27%. For March 12 was 25%. So we expect that contribution to increase. It may not increase dramatically, but a 1-2 percentage points increase is something that we see visible at least for the next few years. And that is because these subsidiaries come from a relatively lower base than what HDFC's own base is, and therefore the percentage of growth in profits for the subsidiaries will probably be faster because of the lower base.
Fair point. Now, Mr. Misri, there are a few reports that suggest that the introduction of the new IFRS accounting norms will help a company like yours realize better valuations. Could you throw more light on that and on how these norms could really change your result reporting going forward?
If you look only at our listed investments, and listed investments would include HDFC Bank, it would include Group Finance, and it will include a whole lot of other treasury investments that we carried. The unrealized gain, the unaccounted profit, only the profit, not the value, the unaccounted profit on these listed investments was as much as 34,000 crores. In addition to that, we have unlisted investments, and on unlisted investments, by any reckoning, our view is that the unrealized gain would be well in excess of 20,000 crores, 23,000 crores. So if you add on the unrealized gain on listed and unlisted investments and reflect that as part of shareholders' funds, then the book value, the shareholders' funds number expands significantly, and that brings down the price to book ratio. That's one way to do it. We may, however, decide that we continue to reflect investments at original cost and not resort to this method. The other thing IFRS will do is that for an insurance company, today under Indian GAAP, we charge the entire commission that is paid to agents at the time of sourcing a policy upfront to the P&L account. Under IFRS, that commission gets amortized. Similarly, when we do our accounting at HDFC, the commission that we pay to our agents for getting business for us, we charge that commission upfront to the P&L account. We do not amortize that over the life of the loan. Not that we are prohibited from doing that under Indian GAAP. We can, even under Indian GAAP, amortize it. But under IFRS, it is mandatory. We have to amortize it. So these are some of the changes that would happen.